Ever wondered why your groceries cost more than they did last year? That's inflation in action. Inflation means prices of goods and services are rising over time, and therefore diminishing the value of your money. Let's say $100 bought you a full cart of groceries last year. Today, that same $100 might only get you 3/4 of it. Economists measure inflation using something called the CPI, the Consumer Price Index. It tracks the prices of everyday items like food, rent, and gas. Prices rise for a few reasons: more demand than supply, higher production costs, or too much money in circulation. The U.S. Federal Reserve aims for about 2% inflation each year. That's considered healthy for a growing economy. But too much inflation? That can erode your savings, raise interest rates, and make life more expensive. Now you know what inflation is, and why it matters to your wallet. Subscribe to the Wall Street Glossary for more simplified stock market terms.